Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersachi in Dubai, and these are the stories that set your agenda. Asian stocks gain, kicking off a week set to be dominated by data, including the Fed's preferred inflation indicator. U.S. and U.K. markets are closed for holidays. Israel is pressing ahead with operations in the southern Gaza city of Rafah, despite a UN court ruling that ordered it to stop. Plus, G7 finance chiefs blast China's trade practices and threaten tougher protections for their economies and critical industries. We will bring you our exclusive interview with French Finance Minister Bruno Le Maire.
We have an issue with the economic model in which China is producing more and more cheaper industrial devices, because it could be a threat not only for the EU, not only for the US, but for the global world economy.
Well, good morning again, everybody. This is Jumana Bersachi in Dubai, standing in for Tom McKenzie today. It is a UK bank holiday. But as ever, we are going to start the show by just taking a look at some of how these key equity futures are trading. And as you can see from what we have up on screen, all of the futures are seen opening slightly in the red this morning, moderate losses on these boards. This after a better close for Wall Street on Friday. We saw the S&P end up about 0.7% higher than NASDAQ, up more than 1%. Investors cheered on by those slightly lower than expected inflation numbers coming through at the University of Michigan sentiment indicators. So something to watch out for there. Asian market boards, this is what Asia looks like this morning. We are keeping a close eye on Japan this morning. Some interesting commentary coming through from the Bank of Japan Governor Ueda. We'll get to that in just a moment, but you can see that Asia Pacific actually up 0.5%, coming off from a week of losses last week. Chinese indices up about 0.3%, and the Nikkei also in focus up 0.3%. But let's get to that Bank of Japan commentary, because it has been driving some of the sentiment overnight, with the Bank of Japan governor suggesting cautiousness was needed in order to cement inflation expectations at 2%.
We have made progress in moving away from zero and lifting inflation expectations. But we must now re-anchor them at the 2% inflation target. We will proceed cautiously as to other central banks with our inflation targeting frameworks.
So we will proceed cautiously. It's giving a bit of a boost to the Nikkei and also to dollar yen this morning as well. While other markets that we're watching out for, euro, you can see trading sideways today, 108.50, but of course is up more than 1% over the last month. The pound as well, similar movement, 127.40 is where we're at this morning. Gold also in focus, up 0.4%. We did see the safe haven currency dip towards the end of the week last week, but the same themes apply. We continue to see reserve buying out of the central banking community. That's giving a bit of support to bullion. And then the VIX index, we have been tracking that, continues to drop despite the event and many of the headline risks that are coming in the next few months. Now, Chinese trade practices have been criticized by G7 finance chiefs, who are threatening escalation. In a joint communique published after their meeting in Italy, they accused China of hurting the economies of trade partners. Let's get more on this story with Bloomberg's Oliver Crook. And Oliver, China was a big part of the discussion at the G7. So what came away from the summit? It obviously featured heavily in the communique as well.
Yeah, Jumana, the context of the timing of this meeting was sort of interesting, because just a couple of weeks before it, you saw the Biden administration throw up those tariffs on EVs and a few other goods across the board. And let's not forget, we're expecting the same from the EU in just a couple of weeks' time, a week and a half to be precise, to really talk about this sort of question of overcapacity, which Yellen really kicked off with a press conference at the G7 meeting, saying that this is going to be a major issue. And for the G7, it was really a venue for them to say that they're speaking with a unified voice on this question of China, where there has been a little bit of disagreement. The language itself was still somewhat hedged, as you'll hear from the sort of communique. China was only mentioned twice, and in terms of trade and overcapacity, only once. But here, have a listen to Jeremy Hunt, the Chancellor of the Exchequer, and what he had to say about the rising protectionism.
Our general view is that it is really important that the world does not unintentionally creep back into protectionism. So our starting point is that we really think hard before imposing tariffs or trade remedies.
And of all the people that I spoke to while I was there in stress with the G7 finance ministers and other officials, Jeremy Hunt was really sort of the last defender of kind of the open market and really sort of cautioning even his allies against some of that protectionism. I mean, you think about that overcapacity argument, right? And the U.S. throwing up barriers and the EU doing so as well. That leaves the U.K. pretty vulnerable to all of that extra overcapacity. But as you heard from the Chancellor of the Exchequer, he's not too concerned about it. He really wants to preserve those open lines of trade throughout the world.
Interesting you bring up that point, because obviously it's the U.S. here that's the key protagonist in terms of looking to pressure China. Oliver, I also noticed that the Ukrainian finance minister was in attendance as well. And I know that Ukraine was also one of the other big topics that was discussed, namely because there have been conversations about what to do with those frozen Russian assets. Did anything come out of the summit?
So listen, there was a lot of positive talk about it, and there was a lot of talk about the will and the initiative and everybody in sort of on broad strokes in agreement. But in terms of actually nailing down the architecture of how the disbursements of Russian assets or the profits from Russian assets would get sent to Ukraine, that was not fully dealt with. And in fact, I was a bit surprised by how difficult the technical issues seem to have been. I mean, the G7 ministers seem to have coalesced around the American plan, which is to say that the future earnings of Russian assets could be dispersed today to the tune of about $50 billion. That is sort of the broad idea. But there are all these technical elements that are really missing still there. Despite that, you heard from a lot of them with a very positive tone. Here's Jeremy Hunt.
The G7 was absolutely united in its support of Ukraine, and it always has been, but I felt that it was stronger than I've seen it before, and I think that needs to send a very big signal to Putin that we are not going to let him succeed.
So a lot of positive talks, sort of lacking on the details. And remember, what they need to do is they need to hammer this architecture out by 2.5 weeks' time, when the G7 leaders meeting takes place in southern Italy. And that is really going to be the sort of holy grail for them in trying to get that Ukrainian military financing on stable footing, not just for this year, but for the years to come.
Yeah, and possibly with a change in U.S. president, a possible one, which also may throw a spanner in the works. Bloomberg's Oliver Crook, thank you. Amazing coverage over the weekend. So many interviews coming out from Stresa. Now, in Middle East news, the Hamas-run health ministry says at least 35 Palestinians have been killed in an Israeli airstrike at a camp for displaced people in the southern city of Rafah. The strike came 2 days after the ICJ issued a ruling ordering Israel to halt its operations in order to spare civilians. Let's get more from Bloomberg's Honor. And Honor, we know that there have been an intensification of attacks on both sides over the weekend, with rockets fired into Tel Aviv. The response, of course, from Israel over the weekend with missiles directed at some of those camps in Rafah. What else do we know about these strikes?
As you said, Jumana, Sunday's sudden escalation in violence came after Hamas launched rocket attacks into Tel Aviv, which was first in a few months, but all of those rockets were intercepted by Israeli air defenses, following which Israel carried out a strike in a part of Rafah that was overly crowded and resulting in the death of dozens of people. That area in Rafah that was hit on Sunday was not one of those where Israeli authorities were urging Palestinian civilians to move elsewhere, which is what they have been doing over the last few weeks in preparation or in anticipation of a full-on Rafah invasion, which didn't materialize. And that meant basically that the area that was hit, where Israel said it targeted and eliminated a key member of Hamas, resulted in the death of dozens of civilians. And as you said, it just came 2 days after the ICJ court ruling, and it kind of highlighted that what was already on display throughout the weekend, a significant disagreement over what exactly the ICJ court ruling meant.
Yeah. Well, of course, the backdrop to all of this is we found out towards the end of the week last week, after that video was released to the public about the abducted female Israeli soldiers, that Israel, due to public pressure, are now looking to re-engage in talks with Hamas once more via mediators. What is the latest on those talks, given now we know that there has been an intensification of violence over the weekend?
The violence definitely puts in danger the possible resumption of talks. As you said, the Qatari foreign minister, who has been one of the key mediators in the talks that have been going on for months now, met with intelligence chiefs both from the U.S. and Israel last week in Paris, and this week we expected those talks to resume again. But if anything, Sunday's attack puts on display the significant difference between the two sides. For months, mediators have been trying to bridge the gap between Israel on the one side and Hamas on the other. Israel sees a possible deal for a cessation of hostilities as an opportunity to get the Israeli hostages held by Hamas in Gaza to be released. Whereas for Hamas, the language in any deal should be constructed in a way that so that the ceasefire can be a prelude to a permanent, long-lasting, if not peace, at least cessation of hostilities. That's the key difference between the two sides here. And if anything, Sunday's attack puts in danger the resumption of talks that we expected to take place this week between the two sides.
Bloomberg's Honor Ant, thank you so much for the latest out of the region. Now, bond traders who are stuck in a waiting game over Fed policy may soon get some welcome support. For the first time since the early 2000s, the U.S. Treasury is preparing to launch a series of buybacks. You heard it here first, while the central bank begins to taper the pace of its balance sheet runoff. This ahead of the Fed's preferred inflation indicator set to be released later this week. Well, for more, let's bring in Bloomberg's MLife strategist, Ram. Look, I think the details here are very important because it could be construed as a buyback, but it's not with the aim of pursuing monetary policy. I think it's important to note that these are liquidity operations. The Fed is introducing them because they want to help include or inject some liquidity in some of the off-the-run treasuries. But what impact is that going to have on bond markets, essentially?
Morning, Jumana. I think it's going to have a marginal impact. It's going to have some kind of an impact, but it's going to be marginal because the overarching the policy factor that's going to weigh on the markets is inflation and monetary policy. At the margin, this reduction of the buyback is going to improve liquidity because these treasuries go off the run. And it's very hard to trade them and very illiquid, and it helps them at the margin to bring back those securities. The more important measure is going to be the runoff in QT. That's going to reduce from 60 billion to 25 billion. That's going to help treasuries a lot more than the liquidity measures. But overall, there is no getting away from what the inflation numbers mean for the Fed's policy. We are going to get the Fed PCE this week, and if it's going to be 2.8%, it's going to be hard to argue that the Fed is going to cut rates by a whole lot.
Yeah, ultimately, it's inflation expectations, the analysis of where our star is going to be that's going to determine where those rates end up. But I also want to turn and ask you about the ECB, because our colleague Oliver Crook was interviewing the Bundesbank president, Joachim Nagel, over the weekend. He's obviously one of the more hawkish members of the ECB, but I thought it was interesting to know that he doesn't think that June should be a live meeting. He's happy to wait until September. Of course, markets are centered around June being the timing of this first rate cut. Would it be a big surprise to the market if they don't go for June at this point?
I would be very surprised if they didn't go. I think Nagel is one of those hawkish, really outlying hawkish members, as you mentioned. So it's not a surprise that he would say that. But I think the bulk of the committee governing council has come around to the view that June is when they will go first. And I think we will get that reduction. But I think what is interesting is what is going to happen beyond June. Are we going to get cuts at every meeting, or are we going to get cuts at alternate meetings? And how many cumulative cuts are we going to get by the end of the year? I think that the markets have been factoring in 3 rate cuts by the end of the year. I think that's a bit of a tall order, especially in a situation where the Fed is not going to cut too much. So I think 2 cuts is more likely, is what the markets should perhaps expect.
Yeah, you raise a really good point, because we spend so much time talking about the timing of the first rate cut, but we don't spend enough time talking about how frequently these rate cuts are going to occur subsequently. Ven, thank you so much for joining us around the set today. That was Bloomberg's MLife strategist, Ven Ram. Well, a quick look at what else we have on our radar. In terms of some key events coming up this week, we have the EU Foreign Affairs Council that starts today, but it is a 2-day meeting, so we'll get some communiques from that tomorrow. Wednesday is something to watch out for. That is the deadline for those BHP Anglo-American talks. Don't forget, of course, that BHP have now made 3 offers to purchase Anglo-American. But this time around, they are giving them a couple of days to come back with a renegotiated offer. We'll see whether there's any further information about potential divestments of assets. That's key for Anglo shareholders. And then Friday, the big event for U.S. investors is going to be that PCE indicator, the Fed's preferred inflation gauge. So something to watch out for there. It is expected to show a moderation of inflation to the lowest level this year. Now, also coming up, South Africa's president urges people to turn out in the country's general election. We are live in Cape Town ahead of Wednesday's poll. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. President Cyril Ramaphosa is urging citizens to turn out in Wednesday's election. That's as South Africa's ruling ANC party risks losing its parliamentary majority for the first time since the end of apartheid in 1994. Public Enterprises Minister Pravin Gordhan says the party will come out on top.
The ANC still, I think, represents the best interest of virtually all South Africans, that it would climb the wave, so to speak, of optimism and come out above 50%. And once again be given an opportunity to continue to build democracy in this country, to build our economy, and to ensure that the inequality and the divisions in our society are attended to in the ANC way.
Well, key elections coming up this weekend. Let's bring in my Horizons co-anchor Jennifer Zabasaja, who is in Cape Town once more with a guest. Jen.
Yeah, good morning, Jumana. I have Melanie Verwoerd. She is a former ANC MP, political analyst. She's also a Bloomberg opinion contributor and the former ambassador to Ireland. Melanie, thank you so much for being here. You're perfectly primed to talk about this. So we were just listening to a thought of Pravin Gordhan still expecting the ruling ANC to get that 50%. What is your sense?
Yeah, I think it's a bit of optimism and spinning by the ANC at this stage. I don't think it looks unlikely that they'll get over 50%, but most probably somewhere around the 45 and upwards seems likely at this stage.
So then where do they lose out on that percentage, on the majority?
Look, they lose it everywhere across the country. They have lost from their base support, which is mostly, of course, African support, black South Africans. But in particularly in KwaZulu-Natal, they've lost a lot of votes because, of course, of Jacob Zuma and the MK party. That is the second biggest province in South Africa in terms of voting numbers. And then they've also lost a lot of support in Gauteng, which is around Johannesburg, which is the biggest province in South Africa. And that hurts them.
And yet, Melanie, you say you bring up former President Jacob Zuma. You wrote a Bloomberg opinion column that says he may not actually make the difference that a lot of people were expecting. Can you just explain that a little bit?
Well, first of all, he's not in Parliament. The IEC and then eventually the Constitutional Court ruled that he cannot stand as a candidate. And all that the MK party has to offer their voters at the moment is actually Jacob Zuma. There's not real policy and so on. So it's very much an anti-ANC vote and then a Jacob Zuma thing. And Jacob Zuma, of course, is also getting elderly. So for me, even though I'm sure they will get something like around 10% or just below, around that number in this election, but very much a flash in the pan. One cannot see them in 5 years from now unless things change dramatically within that party, still being a real factor.
But then does it still have an impact on South Africa and on the democracy moving forward, especially because of some of the policies that they've been pushing for?
Yeah, not really, because remember, what ultimately happens is cabinet decides the way that the country will go forward and decides on policy. So MK will almost 100% I can say that they will not be in cabinet, first of all. So all they can do is make a lot of noise in parliament. At 10%, they're about 40 seats in parliament, 11%, 44 seats in the national parliament. So they'll make a lot of noise and they'll maybe disrupt parliament and so on, but they won't have an impact on any of the policies. And that's equally true of any real coalition. The ANC is going to still be such a dominant factor that they won't really be able to to make that much of a difference. So I think in the end, with all the noise that there is, it won't really make a big difference.
So then let's just talk about coalitions, Melanie, because a lot of people are expecting there to be a coalition. Can it work on a national level? I mean, we see in some provinces it does not work, but you've experienced coalitions to a certain extent. Could it work nationally?
Well, especially, we've seen at local government that it has been, actually the majority of local governments, it has worked, but they have been the smaller local authorities. Where we've seen the big disasters have been on the national level, on the bigger municipalities. And that's, of course, the concern, that could you have coalitions that will collapse the country. If the ANC gets above 45%, I think it will be stable. I think it will be coalitions with the smaller parties or with independents, and I think that will be a fairly stable coalition. It's our current president, Cyril Ramaphosa's happy space to, include people, etc. And of course, we've had a history of, right in the beginning, what was called the Government of National Unity, where all the political parties were represented. The ANC has been in a coalition or a partnership through all these years with what's called the Tripartite Alliance with the trade unions and with the SACP. And they've also brought in little parties like Good, and even at some stage they had the Freedom Front Plus in. So we have done that on a national level. I think the only real risk is really, and what would concern markets and investors, is if they are forced to go into a coalition with the EFF, which we have seen at local government has been very unstable and also have very radical policies and could be very disruptive. But I think otherwise, it will work, especially if the ANC is above 45%.
And does that mean Cyril Ramaphosa staying in the presidential position?
Definitely in the short term, he will be there. The question is more, does he stay over the long term? And that would be his choice ultimately. I think whenever he decides to leave, it's not going to be a messy transition. It will be a peaceful handover.
All right, we have to leave it there. Melanie Verwoerd joining us here in Cape Town, where the sun is slightly coming up. Jumana, back to you.
It's a beautiful shot over Cape Town this morning. Jennifer, thank you so much. That was Horizon's Middle East and Africa anchor, Jennifer Zabazaja. Well, plenty more in coverage of South Africa's elections. We speak to Cape Town Mayor Jordine Hill-Lewis at 7:30 UK time, and Patricia de Lille, Tourism Minister and leader of the Good Party. That is at 9:30 UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now some of the other stories making news. A Qatar Airways flight has hit severe turbulence over Turkey, injuring 12 people. The Boeing 787 landed safely as scheduled in Dublin, and Qatar Airways says it is investigating the incident. Last week, a Singapore Airlines flight made an emergency landing in Bangkok after severe turbulence killed one passenger and injured dozens of others. And NVIDIA boss Jensen Huang and a bipartisan delegation of U.S. lawmakers have arrived separately in Taiwan. The legislators are due to meet with the president, Lai Ching-te. And the visits come after China wrapped up its largest military drills around the island in a year. The U.S. has since accused Beijing of military provocations. And later on the show, we're going to be talking about the Bundesbank president, who tells us that the ECB should wait until September to make another move after a June rate cut. Bear in mind, the market is pricing in 21 basis points of the possibility of a rate cut for June, less so for September. We're going to bring you more from that interview that happened on the sidelines of the G7 in Stresa in just a few moments. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersetchi in Dubai, and these are the stories that set your agenda. Asian stocks gain, kicking off a week set to be dominated by data, including the Fed's preferred inflation indicator. US and UK markets are closed for holidays. Israel is pressing ahead with operations in the southern Gaza city of Rafah, despite a UN court ruling that ordered it to stop. Plus, G7 finance chiefs blast China's trade practices and threaten tougher protections for their economies and critical industries. We'll bring you our exclusive interview with French Finance Minister Bruno Le Maire.
We have an issue with the economic model in which China is producing more and more cheaper industrial devices, because it could be a threat not only for the EU, not only for the US, but for the global world economy.
Well, shots fired from some of these European finance ministers to China on the back of that G7, a big story for today. Well, I'm Jumana Bersachi sitting in for Tom McKenzie. It is a UK bank holiday. A quick check on how these markets are faring. You can see all of the major equity futures are seen opening slightly in the red. So the Euro Stoxx 50 futures seen about 10 basis points lower. FTSE 100 about 0.3% weaker as we head into what could be quite a crucial week for market direction. Of course, Friday, the big event with that PCE number coming through from the U.S. As for Asian markets, well, it's a slightly different type of sentiment this morning. For once, we are actually seeing the MSCI Asia Pacific trade in the green. This is after a week of losses last week, seen about 0.2% higher in trading today. The Chinese indices also brushing off some of the commentary that is coming out of that G7 finance minister meeting, trading in the green this morning as well. And then the Nikkei up 0.5%. This on back of comments from the Bank of Japan Governor Ueda suggesting that they can proceed cautiously with rate hikes. As for other assets that we're following this morning as well, let's take a look at some of those currency pairings. We've got euro trading sideways at around 108.50. The pound also trading at 127.50. Both of them are up 1% in the last month. Gold also seeing a bit of love this morning as well, up 0.4% after dipping towards the end of the last week, but still coming off from record highs in the bullion towards the beginning of the week last week. And then the VIX index still struggling to gain a bid. You can see it is sitting just shy of 12% this morning. Well, ECB Executive Board member Piero Cipollone says the time is right for a June rate cut, echoing comments made by Governing Council member Fabio Panetta over the weekend. Speaking at the Economy Festival, Cipollone said any move towards afterwards will be, quote, data dependent. Panetta, meanwhile, said that there are conditions for a change in monetary policy at the June 6th meeting. And it's not just the doves we've been speaking to. We've also been speaking exclusively to Bundesbank President Joachim Nagel. He says the European Central Bank should probably wait until September for any subsequent rate cuts.
So my expectation is that there is a flattening of the wage data that is occurring over the next months. So I believe that is some relief coming also from the wage data side. But nevertheless, wage data are still strong. So we have to keep our vigilance when it comes to the next rate decision.
So it sounds like it's not concerning you that much. That being said, next week we are expecting inflation to come back up in Germany, in Spain, in France, in the Eurozone, core to sort of slow its descent. Does that not concern you?
I think as a central banker, you're always being concerned. But what I see, the trend is the more important issue here. What I see is that over the last couple of months, inflation rates came down. So what I expect also for the next months, that inflation is coming down further. Core is coming down. Headline will come down, came down here already. So what I see is that the probability is increasing that in 13 days we will see the first rate cut in the Eurozone.
And beyond that, do you think that we can rule out then back-to-back cuts given the sort of uncertainty on the outlook for inflation?
I think I believe this is a very important point.
Yeah.
There is not a kind of an autopilot that when there is maybe the first rate cut, that there is a consequence, maybe let me say, more rates cut coming. I think this is something, I believe this is not helpful, this discussion. What did we really write over the last 2 years is that we really followed the meeting to meeting here, understanding, and I believe that should still be the case. So if there's a rate cut in June, we have to wait, and I believe we have to wait till maybe September, I think July. But as I said, it is too early to speculate.
Maybe difficult to give forward guidance, do you think, under these circumstances particularly?
I think, or I believe that forward guidance was helpful maybe in an environment where there are blue skies, right. Sun is shining, but now we are in a world that is more difficult. Yeah. It's a very uncertain world, a lot of geopolitical risks. So the data that is incoming is the most important indicator that we have to follow.
Well, very insightful commentary from the Bundesbank President Joachim Nagel there, pouring cold water the suggestion of subsequent rate cuts, even if the ECB do go for that rate cut in June. So obviously notable, given he's one of the hawks on the ECB committee. Well, speaking of Germany, the German Chancellor Olaf Scholz said that the creation of a European Capital Markets Union will be a priority during meetings with French President Emmanuel Macron. President Macron is in Germany on a state visit where he will attend celebrations marking the 75th anniversary of the German Constitution and hold a joint cabinet meeting on Tuesday with German counterparts. So let's get more on this story with Bloomberg's Christoph Rowold. Very interesting to see them talking about Capital Markets Union once more. This has been a perennial topic as far as EU leaders are concerned. But what were the main talking points in Berlin so far?
Yes, good morning. As you mentioned, the comments about the capital market union were made by Olaf Scholz right just before Emmanuel Macron landed in Berlin. When he arrived and was welcomed by the German president, by Frank-Walter Steinmeier, they focused very much on the importance of the Franco-German relationship in order to push through some deeper reforms across Europe, to allow closer cooperation, basically related to like a wide range of different initiatives, be it defense spending, political cooperation, and as you already mentioned, the capital markets union. So there are indeed quite a lot of like talking points to go through when he's in Germany today and tomorrow.
Let me just ask you more specific questions about what is going to be the focus of today's meetings. Obviously, he's there for the 75-year commemoration of the Constitution, but what is going to happen today specifically?
Today specifically, he's going to go to the city of Dresden, where he's going to hold a pretty like eagerly awaited speech, basically stressing the highlights or the importance of stronger and deeper ties between France and Germany, which in the past have been one of the key drivers to allow cooperation across Europe. But I think as we and others have reported, the ties and the relationship between Emmanuel Macron and Olaf Scholz, the German Chancellor, have probably been a bit more difficult than compared to the relationship between Emmanuel Macron and Scholz's predecessor, former Chancellor Angela Merkel. So I think it's going to be really important to see like how much concrete progress they can really make to really cooperate more deeply and more closely than France and Germany have probably done over the past 2 to 3 years.
As often is the case with these types of meetings, I'm sure many analysts will be just watching out for the personal chemistry between those two leaders, given what you just said about sort of the tensions that have existed between the two of them over the last couple of years. Bloomberg's Christoph Rowold, thank you so much for joining us today on the show. Well, French Finance Minister Bruno Le Maire says the G7 is united in its concern over the threat to the global economy from China's industrial overcapacity. Speaking to us exclusively from the group's meetings in Italy, Le Maire also confirmed its commitment to funding support for Ukraine.
We are on the right track to get final approval by the G7 leaders summit. The Holy Grail is to ensure long-standing funding for Ukraine. And make no mistake, the G7 countries are fully committed to provide long-standing political and financial support for Ukraine. So there are many options on the table. We will work on those options to find the best one. We need to have the most solid option from both a financial and legal point of view. But I want to leave no uncertainty. We will find an agreement and we will provide to Ukraine the necessary funding.
In terms of China, where would you say that you sort of agree with the United States and disagree with the United States? Where in your approach do you think that there is total synchronicity, and where do you want to see some changes?
We agree at the G7 level that we have an issue with the Chinese industrial overcapacities. And this is not a question, anything against China. China is an economic partner. But we have an issue with the economic model in which China is producing more and more cheaper industrial devices. because it could be a threat not only for the EU, not only for the US, but for the global world economy. And we need to address that issue. Having so many industrial devices for the green industry at a very cheap price on the global market could jeopardize the whole world economy and the growth in the world. So that's why we need to address the issue. We need to engage China, and we need to find solutions.
That was French Finance Minister Bruno Le Maire with Bloomberg's Oliver Crook. Now, the UK Prime Minister Rishi Sunak has put forward a programme of national service in one of his first pledges of the election campaign. Let's get more on this from Bloomberg's EMEA News Desk Managing Editor Adam Blanford. Adam, I think many people were surprised to hear about this announcement over the weekend, especially because Britain scrapped mandatory national service in the 1960s. Also, in light of the polling, which suggests that many younger people are not in favour of mandatory service. So why does the Prime Minister want to revive it?
Good morning. The underlying fact here is that we're starting an election campaign. Of course, the election was called last week, and the Conservatives under Rishi Sunak have come out of the gate with what is their first eye-catching campaign promise, and the polls being very much set against them at the moment. Sunak's party has been trailing the Labour opposition by around 20 percentage points for a very long time now in polls, and he's trying to narrow that gap. One of the ways to do that is to appeal to some of the voters who may have drifted away from his Conservative Party and have been attracted to a smaller, newer party called Reform. And the thinking is, the suspicion is that this policy is really aimed at bringing back some of those voters in some of seats, older voters, perhaps, that come out more strongly in favour of a policy like this. But of course, there's been reaction against it, especially from some young voters. There's been scrutiny of the funding, of how it might be paid for, how it might be put into practice. And the Home Secretary, James Cleverly, was asked about this on television yesterday, and said that it's difficult to enforce and won't be have a criminal sanction if you don't do it. So it's an early skirmish in an election campaign which has just got underway. It's certainly an eye-catching promise, but as you say, it's one that hasn't been had a home in the British national psyche for many decades now.
Yeah, it was a bit of a surprise for, I think, many people over the weekend to see that the idea of a national service being floated once more. Turning to the Labour Party, they have pledged to review plans for the UK government to reduce their stake in NatWest if they win the upcoming general election. Tell us more about that and where this framing is coming from.
Well, as ever with the Labour Party at the moment, it's we aren't able to talk about too many specifics. They're also at the beginning of their election campaign, and they remain tight-lipped about many of their policies. They're cultivating a more pro-business attitude than in years gone by, and that's a big part of their pledge, both for the campaign and for how they say they will govern when they're in office. And they're making lots of outreach on those levels. Their statement yesterday, or their Bloomberg's reporting last night and into this morning, is very neutral. There's no particular sense that all they say on the record was Labour will review the details of the NatWest share sale. So the government's remaining stake in NatWest was due to be put up for sale, I think it was in June. That's now the middle of the election campaign. So the future of what happens with that, the government, of course, still the largest shareholder in NatWest, some 15 or so years after the financial crisis bailout. So Labour will review that. I wouldn't want to speculate entirely on what they will do, but the government has been generally selling down that stake over the years and attempting to reduce that as a share of public ownership.
Yeah, and a big one for investors as well in NatWest shares. They've been doing quite well this year up until the last few days. Yeah. Adam Blanford, EMEA News Desk Managing Editor. Coming up, markets are preparing for the dawn of the T+1 rule, which begins tomorrow in the U.S. We'll break down what this means for you next. This is Bloomberg. Welcome back to the show. Well, we are getting some breaking news out from Elon Musk's XAI. So the news has just been reported now saying that they have announced a Series B funding round of $6 billion. Elon Musk following that up with commentary saying that there will be more to announce on XAI in the coming weeks. So that is interesting to note. XAI Series B investors include Sequoia Capital and Fidelity. And all of this in part and parcel, of course, of Elon Musk's big visions for AI. He's been very outspoken about AI, its promises as well as its limitations, and has been one of the main people in the space talking about the need for regulation around it. This, of course, as he expands his own AI capabilities through XAI. As we found out this morning, they are going to go for a Series B funding round of $6 billion. Now, elsewhere, markets are preparing for the dawn of the T+1 rule, which begins tomorrow. It means U.S. trades will now settle in 1 day rather than 2. Now, for more on this, I'm joined by Bloomberg's Kriti Gupta. Kriti, I've got to say, in my previous life, I was a bond girl, bond trader, and back then, U.S. Treasuries did settle T+1, but equities had been T+2 all this time until today. So why the change?
Well, this is a little bit of FOMO, but also a little bit of PTSD. You pick your acronym. But a lot of this is coming off in 2021. We all remember that kind of meme craze that we saw in the stock market. Well, a lot of investors, global investors, were exposed to that kind of volatility in a way that they couldn't really handle it when you have the retail crew get in on some of that volume. And Jumana, you mentioned the bond market. The FX market, for example, is also still T+2. So it's not just the equity market that has this delay, but it is specifically for international investors. The idea here is to kind of make it a little bit more efficient, to make sure that despite all of the investors around the world that are exposed to the U.S. market, they're able to get their settlements in faster. Right now, it takes up to a week to actually between pushing that buy button to getting to the actual trade, and then ultimately for the seller to give that trade up as well, or give the share of that stock they're looking at as well. So again, all in all, about 4 to 5 days to make that process go. Now, hopefully, to make the process a little bit more efficient, this is going to not only entice more investors to invest in the United States, but also to make their lives and perhaps some of the banks' lives a little bit easier as well.
It's interesting what you were saying about the mismatch in timing and how long it takes for both sides of the trade to get in on it. But I just wonder, obviously the stated purpose is to increase efficiency in this market, but could it also increase the number of fails?
It absolutely could, and that's one of the kind of scary parts of this. It's why not make it a T+0? Why not make it an immediate settlement the way it is within the United States, for example? You make the trade early in the day, but by 4 o'clock when the market closes, it's all settled and done for. The thought process here is that you need also a little bit of time to catch some of those failed trades. And that's actually kind of one of the nightmares in terms of adopting this system, Jumana. If you look at what some of the industry is saying, there's a spike in the number of failed trades. At least that's one of the fear that there might be operational glitches, additional costs. You're even seeing some of the banks around the world really accommodate for this long-term. Citigroup, for example, is just one bank that's actually saying we're going to move some of our staff to Kuala Lumpur, for example, and work on a Tuesday to Friday or Tuesday to Saturday schedule to accommodate some of this long-term shift. Eventually, the hope is everyone will be on the same page, but this is also staggered by country. Canada, for example, getting onto this the 28th, but then you have the likes of India, for example, or even the likes of the UK, who may not get onto this until 2027.
You know, one thing that I'm thinking about is it also may catalyze an increased amount of automation in this space as well, simply to mitigate the amount of human capital that's needed to make that shift. What are market participants saying about the impact it's going to have on automation?
Well, they're saying that, well, it might not be necessarily, this might not be the game changer for it, given that automation has been a long trend when you look at the trading as well. But the added component to this is also the FX piece as well. This is not just an equity market story, Jumana, to your point about the bond market trading as well. The fact that you have not only the additional step of settling the trades, but the fact that you have an additional step of, for international investors, making sure you have that dollar to then spend into the U.S. equity market. It creates a very long kind of pace. And if we're talking about automation, this is where it could get more efficient in that additional step in other markets when you kind of look at those cross-asset correlations. But right now, Jumana, you and I both know very, very well that trading is considered on the low or on the decline simply because of that threat of automation. This may not necessarily accelerate it, though.
Yeah, it's a good point. Also, other good point that we need to bring up is it's a U.S. bank holiday today. So I guess all of these trades are actually going to start trading with T+1 settlement as of tomorrow, is something worth bearing in mind. Bloomberg's Kriti Gupta, thank you. Well, plenty more coming up on our show. We'll be back in just a few moments, but this is Bloomberg.
What did we really right over the last 2 years is that we really followed the meeting to meeting here understanding, and I believe that should still be the case. So if there's a rate cut in June, we have to wait, and I believe we have to wait till maybe September, I think July. But as I said, it is too early to speculate.
Bundesbank President Joachim Nagel there. Well, let's just take a look at how ECB rate expectations have evolved over the last couple of months. And you can see from this terminal chart, back at the beginning of the year, the expectations are that they would be cutting sooner and faster. Now we are seeing that the first cut is pretty much priced in for around June, the second cut happening around September. And of course, many of them saying that they will have to take a meeting-by-meeting approach and not necessarily cut at every subsequent meeting. So even though the first cut is priced in still for June, subsequent rate cuts, now a big question mark over them. The other chart that we're watching this morning as well is on back of some commentary that we got from Chris Waller over the weekend. And he was just telling market participants that if you want to get an idea of where that R-star, that neutral rate for the U.S. is over the long term, you might as well take a look at where 10-year real yields are trading. This is the nominal yields adjusted for inflation. You can see here trading at 2.14, but the long-term rate is around 2.56%. So something to bear in mind given that commentary from Fed's Waller. But plenty more in our coverage of South Africa's elections throughout the programming today. We speak to Cape Town Mayor Jardine Hill-Lewis at 7:30 UK time and Patricia de Lille, the tourism minister and leader of the Good Party. That is at 9:30 UK time. And later, you don't want to miss our interview with Clemens Fuss, the president of the IFO Institute. That is at 9:20 a.m. UK time on The Pulse. Up next, Markets Today. This is Bloomberg.